Hello and welcome to FI for Kids, a podcast about guiding your kids on the path to financial independence and extraordinary lives. I'm your host, Dominic DeLaquil. Our guest today is Kyle Beltle. Kyle is a CPA and a certified tax coach, and his specialty is helping entrepreneurs make the most of tax advantages without spending too much time so they can invest that time into their businesses, their family, and any other areas of life that bring them joy. So welcome, Kyle, and thanks for coming on the show.
Hey, thank you so much for having me, Dominic. Looking forward to talking with you today.
Yeah, I have to, before we get into things, I just have to say, I know the tax stuff is always, it's important and it's good to, and I'm always interested in, okay, well, if I can save some money and use that for other things, but usually I see tax topics and I'm like,
Yeah.
that's going to be dry. And I'm not the first one to
Yeah.
want to go there. So I'm excited for this conversation today because we've talked a little bit before and you've got a lot of stories about stuff. And also you're not just the CPA, you're the tax coach. So I think that'll be hopefully a little bit more engaging for people. So
I hope so. The goal here is to make this actionable for your audience.
yeah, perfect. Okay. So let's start with just a little bit of your background. Tell us about what you learned about money when you were growing up as a kid.
Absolutely. I was really fortunate to grow up in a home with a father who was an accountant, who still is an accountant. And so personal finance was something that we talked about as a family and something that he talked with us about as kids. And one of the things I really appreciated was how I'm a I'm also very black and white thinker. I'm an accountant as well, but my brother's an artist. And yet my dad was able to really work with each of us as well as my mom to kind of foster the learning to our own learning styles and make it applicable to us. And a great example of that, when I was really young, I was so into baseball, and I remember him teaching me about statistics using baseball cards and kind of taking the cards that I had and teaching me about things like batters averages and just showing me how we can use numbers, how we can use math in the real world. We talked about money in the house. We had books on money. Faith is very important, and I saw them model tithing and giving charitably there. So there was a lot that was both discussed and modeled for me as a child.
So I like this idea of the different personalities because I think as parents, right, that's so important because you can have different kids. You can even have kids that are twins and they'll have different personalities. And being able to adapt that, how you're parenting them in all sorts of ways, and obviously including money, is important. So well, actually, before I get into that, because I want to know a little bit how your dad, how he did doing things a little bit differently for your brother, who was more of an artistic type. But before I forget, I have to ask, so which baseball team did you grow up a fan of?
We were a Mets household.
Okay, all right.
I grew up in New Jersey. We were about an hour and a half outside of New York City, and diehard Mets fans.
Yeah, okay. Because I grew up outside of St. Louis, so I'm a diehard Cardinals fan, and so I always always like to ask.
Yeah, yeah.
Yeah.
Yes, absolutely. But you're absolutely right that each child is a little bit different, and I'm seeing that now even with my own girls, where I've got one who's a natural saver,
Mm,
and she gets excited when her bank statement comes in the mail every month, and yet the other one could care less about money. She only cares about what she can buy with it
mhm.
there. And so you're absolutely right. Like you have to work with each child individually to help them see the importance. And even if it's not a strong suit, encourage them to be proficient at least.
Yeah. Well, I think teach them the basics, right, is super important, right?
100%.
Because you never know, like,
100%.
how those things are going. Because, right, a lot of things with parenting is you're planting seeds, and then you're hoping that those things then sort of sprout later on. And
Yes.
so our daughter is a natural saver, and so she was always really careful with her money. Our son, not so much, but he's learned over time, and he's
Yeah.
much better now. about managing his money and has plenty left over to sort of buy the things that he wants to buy. So
Yeah.
he doesn't spend it frivolously all the time now, but then he builds it up. And then when he wants to get himself a new video game or, something that's a larger purchase, he's got money to do that. And then he'll
Right.
sometimes spend almost everything he has on that, but there are things that then he values and gets a lot of use out of. So he's learned to manage that, which is cool to see.
Yeah. Yeah, absolutely. Tying it back to what are your goals and how is money going to help you accomplish those? Absolutely, Dominic.
Yeah, yeah. So what other approaches are you taking with your girls? What ages are they again?
So my girls are 9 and 11, and some of the things that we've done with them when they were very young, getting them age appropriate books. So it wasn't just reading Goodnight Moon to them, although that is a very good book. But we had also gotten Dave Ramsey has a number of picture books or had a number of picture books that we got for the girls. There was a John Wooden book on his pyramid of success.
Yeah,
And
yeah.
so, yeah, we tried to just get kids books that we could put into the mix of the regulars there, just start planting those seeds.
Now the wooden book, was there a kid's version of the Pyramid of
Yes.
Success? Really?
Yes.
Because
Yeah. It's
that's what I don't know if you're a Ted Lasso fan at all, but there are multiple episodes where Coach Beard, that's the book he's reading, is Wooden's, not the kids version, but Wooden's Pyramid of Success.
That's fascinating. I didn't know
Anyway,
that.
sorry, just a little
Yeah. Yeah,
trivial
absolutely.
aside.
So reading books with them. We also, when they were old enough to start getting an allowance, got them their give, save, spend jars. And then every birthday, every Christmas, when they would get money, we were very intentional about, all right, how much goes in saving? How much goes in giving? And then how much do we have left for spend? Just teaching of that. When they were old enough, taking them to the bank, helping them open up a savings account. And even this past Saturday, my one daughter had some money that she said, "I want to deposit it." I said, "Great. I'll carve some time out and we'll make a trip to the bank and get the lollipops in the lobby there and just make an event out of it, make it fun so that they're, having those positive associations." And then one of the things that I did was when I was setting up the accounts, I made sure that they would get paper statements delivered to the house. And that way, every month, can give that to them and just show them, hey, you still have this money, even if you can't visually see it. You're earning interest on it. Just keeping it top of mind.
Yeah. Well, that's actually, I hadn't thought about that before because it's just all electronic statements, but that's good, right? Then they've got something coming in the mail, comes to them, and then you can write it's that reminder to get it out and look at it and they can see what they've got. That's a good idea. I like that, Kyle. Hi, a quick pause for something I'm really excited about. I'm creating a new program called Millionaire Habits for Families. It's designed to help parents teach their kids how money actually works and start them early on the road to financial freedom. It's habit based and it doesn't take a ton of your time, and it's a step by step program. So if you're not sure how to teach your kids about money, that's exactly what the program is designed for. You can join the waitlist today to get early access and sneak peeks as we get closer to launch. Just go to DominicDeLaquil.com or tap the link in the show notes. Okay, thanks. Back to the show.
Yeah, yeah. Another moment that I like to capitalize on is if I'm working on my personal budget, there is keep the door to my office open. And if they wander in, hey, what are you working on? Oh, well, this is the plan that mommy and I have for our money. Let me show you and kind of plant those seeds because as they get into the teenage years, my plan is to kind of have them walk through the process of budgeting. Not that they will have a lot of money to work with here, but just the mechanics, the process of doing it. Just this past weekend, I was looking at what are some board games that we could purchase that teach about investing? Because recently family board game night has become really big in our household. So I'm like, okay, how can we kind of work some of those lessons in and whatnot? So just always looking for opportunities to have money as part of the conversation because with my daughter who is the older one is the spender by nature she's the spender. It's really trying to see like what helping her tie her goals back to money and a great example of that is she had a concert that she wanted to go to, and so it was just a matter of saying like, well, to go to that concert you need x number of dollars. Today you only have y dollars. What can we do in the next couple of months to save up for that? And One of the things I really appreciate about my wife is she uses Facebook Marketplace simply because she hates clutter. And as soon as we're done with something, it is on Facebook Marketplace and out of the house. But she has shown the girls the entrepreneurial side of that. Hey, you have this toy, you haven't played with it in 6 months. What's more important to you? To keep it for the off chance of maybe playing with it again? Or we have that concert that you want to go to. What if we could sell that and use the money, and just showing them the levers they can pull at this age to take advantage of entrepreneurialism?
Yeah, there's a couple of really cool things in there. So that idea of just teaching them in a very simple, basic way, the entrepreneurial things, simple things that they can do, right? Also starts to teach them some value, right? Like, do I really value this toy? Do I really play with it anymore? Or
Yeah,
I can let it go. Some other kid can then play with it, and then I'm going to use what I'm going to get from that for something else that's now more important to me. Because as we go through, certainly kids, they're having those changes pretty rapidly. But even as
yeah,
adults, we still have those changes and our priorities change and develop and modulate as we go through life. The other thing, and I want to back up just a little bit because I think you talked about when they get a little older, teaching them budgeting, because
mm,
that's such, whatever you want to call it, but the idea of, because I know some people don't like the budgeting word. It's like
right.
taxes, right?
The B
So,
word.
yeah, that's right. But this idea of tracking your money is so essential, because if
Yes.
you're not paying attention to what you're doing with your money, then it's so easy to just be spending frivolously. And then you're not really managing it so that, right, the ultimate goal is, okay, I want to have an excess from what I'm earning so that I can invest that and make it work for me, right? I mean, that's the path
Yeah.
to then really sort of making more rapid progress towards financial independence or financial freedom. But if you're not
Yeah.
paying attention, you can't do that. And so teaching them that habit, because we're doing that with our kids at an early age, is so important. And it doesn't take that much time, right? Like, I've
No.
been doing mine for several years now. And once I kind of have everything sort of lined out, what I want to track, I mean, it's 15 minutes once a week, right?
Right. Right.
And then you always know, like, oh, we need to make some adjustments or we don't. Or, I mean, it's just, and for kids, like you said, it's not like they're going to have a lot to track when they're 15, right?
Hmm.
It's pretty simple, but you're still establishing that habit. So important.
Yeah.
So I think
Yeah,
that's great.
absolutely. I forget where I had heard this or where I had read this, but someone had once said a budget is nothing more than a plan for your money. What are your goals? What do you want to accomplish? All right, here's the plan for how we're going to do it. There, it doesn't have to be drudgery.
Yeah. Yeah. And real quick, you mentioned you're looking for board games to play that teach investment.
Yeah.
And an episode, I actually recorded one about a year ago with a guy who has this whole idea that there are a ton of strategic board games that I didn't know anything about. His whole point is, man, they teach you all kinds of things that are important for financial independence. And they're not specifically focused on finances, but they teach you probability and they teach you valuation and they
Yes.
teach you strategic things. And so I think I'd have to go back and look. I mean, that was episode 6 or 7, maybe 8.
Okay.
But it was a really great conversation. Chris Terrell is his name, and he talks about a whole bunch of different strategic board games that really sound fascinating. We've actually gotten some of those, and we've played a variety of them, and they're great. And it really, like, I think he has a great point in there that you can teach your kids things that are important for money without necessarily teaching them directly about money. You're just playing board games
Sure.
that are fun.
Yeah, I'll have to find that episode in the back archives.
Yeah, I'll actually find that and put a link for that in the show notes.
I love that.
Yeah, that was a cool episode. Really
I bet.
interesting guy. Yeah, and yeah, cool stuff. And he's been playing board games forever and had a ton to say about him. So it's worth, even if you don't listen to the whole thing, just listening to some. Okay, all right. So let's transition a little bit, Kyle, into talking about more specific financial things and recommendations for people. So before we get into tax strategies that adults and entrepreneurs can be using to have more money to invest, let's talk about some simple, basic things that parents can do early on to give their kids a head start.
Absolutely. Dominic, there's three, actually, let's go with four. Go with four things here that I think are great tips for parents who want to help give their kids a financial leg up from a tax perspective. So the first one is the Roth IRA. Huge fan of that because, as everyone knows, the Roth grows tax free, the money comes out tax free. But when kids are putting money into a Roth, the money is likely either zero federal income taxes, or if they are paying, it's the lowest tax rate they're ever going to have in their life. And so
And
take
Kyle, that's just because they're just not earning enough to meet the threshold. Is that right?
correct. Yeah. Yeah.
Okay.
Many children are going to be below the standard deduction and the federal standard deduction. And so they won't have to pay any tax. That's absolutely correct. And so taking advantage of these early years is really important. But one of the pushbacks that I will often get from people is, well, my kid doesn't have a lot of money. And that certainly is a fair point. But I've crunched the numbers on this. And let's take a child who all throughout high school, all throughout college, ages 14 through 21, they work in their high school job, their college job, and they're putting $2,500 a year into a Roth. And let's just assume it compounds at 8% annually. If they just were to work during those high school and college years, put that money aside and never touch it again, they would hit age 65 and have $786,000 waiting for them tax free. So even if it's just a little bit of money. Yeah,
And
yeah,
just to be clear, and that's that money they put in from 14 to 21, you said, right?
yeah.
And that's not then you're not talking about money they would add when
No.
they're having their adult life. You're just talking they put that money in, let's say it's invested in a whole market fund, and so
Yeah,
it's returning on average 8% over time. And
yeah.
so then you're talking really about that compound interest in that the rule of 72 and that doubling
Yes.
factor. Yeah.
Yeah,
And so just from that small amount of money at age 65, they've got $750,000, right? $750,000.
exactly.
Yeah.
And hopefully the habit sticks with them
Yeah.
throughout their working years. They're maxing out the Roth, they're maxing out other retirement accounts, and they're going to have even more. But my point is this, if they can start today, not only are you building a habit, but there's going to be some solid returns behind that.
Yeah.
So as much
Yeah.
as possible, the Roth IRA is a great way to get a leg up.
Well, because again, right, it's not a lot of money, which I think is kind of what you were saying early on. Well, people are like, well, it's not that much money. What's the point? But the advantage that kids have is they're not dumping a ton of money in, but they have time.
Yes,
Yeah.
exactly.
Yeah.
Exactly. So that the Roth is the first thing I always encourage parents to look at. The second is 529 plans. Now, I also get some pushback on 529 plans because when they came out, the only thing you could do with the money was put it towards college. And so rightfully so, many parents are like, well, I don't know if I want to put money in that if Johnny or Susie's going to college. But what even just last week, I was having a conversation with someone. They were not aware of all the great benefits that have been added to the 529 in the past couple of years. You can change the beneficiary of the 529 account to another child or even to a grandchild. You can roll a portion of it over into a Roth IRA. You can use the proceeds for pursuing post-secondary credentials. And you can even use it for homeschooling supplies and curriculum now. There's just so many options that the 529 plan can provide that I
Well,
really encourage families to take advantage of it.
and one of the other things that's come up in other conversations, Kyle, is you can also, so if you've got a kid who doesn't want to go to college, but wants to go to a trade school, for example, right? You
Yeah,
can use it for that.
exactly. Yeah, 100%. 100%. And a quick bonus tip that I'll throw out there, and I'll preface this by saying 529 plans are administered by the states. And so the rules will differ state to state. Please talk with your tax advisor, your financial advisor about the specific rules for your state. However, I'm in Pennsylvania, and in the state of Pennsylvania, you only need to have money in your 529 account for 7 days in order to get a state tax deduction for those proceeds there. As many of your listeners know, there's no federal tax deduction when the money's going in, but many states will offer a state tax deduction, some cases a state tax credit for your contributions. So Pennsylvania only requires it to be in there 7 days. What I will often tell parents who have kids in private school, K through 12 right now, we got those tuition bills. Don't write a check from your checking account to the school. Write a check, put it in the 529, let it sit for a week, and then pay your school from the 529. Pennsylvania has a 3% state tax rate. And so essentially, what parents are now doing is getting a 3% discount on their tuition by
Yeah.
simply adding in this extra step of paying it. So check with your professional team about what you can and cannot do within your state. But that's another great way to utilize that to help your kids out.
Yeah, that's cool. I never knew that sort of thing, Kyle. So that's great. That's good advice. Thank you.
Yeah. So the second thing, 529 plans. The third thing I encourage parents to look at is our UTMA accounts, Uniform Transfer of Minors Act. And I think we would all agree it takes a lot of consideration, a lot of planning with the UTMA. You don't want to trigger kiddie tax. You want to make sure you're compliant with your state rules. And not every parent wants their kid to just have open season on an account come when they turn 18. So there's a lot of considerations. However, in my opinion, having that account, allowing the kids to be part of the investment decisions of how we fund, or not fund the account, how we invest the account there, it's just a great educational tool that is going to indirectly help them develop their financial chops.
Yeah, one of the other things I like about those is that if you've got grandparents or other family members that want to give money to your kids, is then they can put that money into those UTMA accounts, right? And then that money can be invested, like you're saying, and then then you're back to you're growing that money over time for you. So, right, and you can take advantage of those gifts from extended family members. So,
Yeah. Yeah. So the final thing I will mention in terms of ways of giving your kids a leg up, and this is really very also beneficial to parents. If you are an entrepreneur, if you own your own business, look for ways that you can get your kids involved in the business so that you can put them on payroll. The primary reason would be, well, this is going to give them earned income so that they can contribute to the Roth, to the 529, and that's fantastic. But it's also a way of shifting income. And here's what I mean by this. Let's say that you have a child who comes to you with a discretionary expense. They want to go to a camp, an overnight camp. It's going to be $1,000. Well, Dominic, if you write a check for $1,000 out of your checking account for this camp, that is money that has either A, been taxed through your paycheck, or B, has been taxed through your K-1, and you've paid federal and state income taxes at your presumably higher levels there as the
yeah,
parent.
yeah,
If we are now paying our kids, either A, they're below the standard deduction, they're not paying any federal income tax, or B, they're paying a much, much lower tax rate than their parents are. And so we're teaching them about, hey, about goal setting. If you want to go to this camp, here's how many hours you'd need to work in the business to do this. And we're also shifting some taxes. So that's another great way. And again, I get some pushback from parents. Well, what are they going to possibly do? And there are some legitimate concerns there. I was talking with someone today who has a 6-year-old. I mean, there's really not too much a 6-year-old can do. But at the same time, I also had a conversation one time with a woman, and she's like, every Saturday, my husband goes into the office to do a little paperwork, get caught up on the emails, and he just brings my son along because my son loves the trucks in the shop, and, he plays around. And she's like, we should really have him washing those, shouldn't we? I was like,
Yeah.
yes. Yeah. Clean
Yep.
up the trash, sweep up the floor around the shop. Suddenly this time with dad, we can make it a little bit more productive. So get creative and find ways to get your kids involved with the business.
Yeah, no, that's great. And it also lowers, because as a business, right, that's an expense. And so that lowers the profitability of the business, which,
Yeah.
could potentially help lower your tax burden for the business as well. So,
Yes. Yeah. Yeah.
yeah,
It's a
all
beautiful
kinds of
cycle.
benefits there. Yeah, yeah.
Yeah.
Okay, great. Um, so let's use that then to transition into some your recommendations for tax strategies that adults could be taking advantage of, whether they're entrepreneurs or not. So let's talk about some of those things.
Absolutely. So if I can, I'll continue with down this entrepreneurial path real quickly, and then we'll talk about some strategies that really anybody can be taking advantage of. But if you're an entrepreneur, first thing I would encourage you to talk with your tax professional about is pass-through entity tax, or PTET. As many people know, state and local taxes are deductible on your federal tax return. However, there's a cap. And so for people who either A, are in a state with very high income taxes, or B, have an extremely profitable business, they are there's very good chance that they are hitting that cap and they're missing out on taking all the deductions they can. And because of that, a lot of states have rolled out these pass-through entity taxes, which essentially allows a business to directly pay the taxes, the state taxes, on that business's income. And so it doesn't necessarily lower the amount of state tax you pay. It's just a mechanic to get you more federal deductions. And a great example of this, Dominic, I was working with a woman last year where her state had just recently had implemented a pass-through entity tax, and we were able to save her $29,000 just by having the business take care of it versus the traditional path of allowing it to flow through to your return.
Okay. So with that PTET, right, that pass through entity at the state level, you pay the taxes. So then basically that becomes effectively an expense, which lowers the overall income of the business. So now the income that you're paying taxes on federally is a lower level because of the
Yes,
state taxes that you paid through the business rather than through your personal
correct.
income tax. Am I understanding that right?
Yeah, yeah,
Okay.
100%. And so I always encourage people, just talk with your tax pro, see if your state offers this. If they do, does it make sense for you to take advantage of it there? So it's just a good point of discussion.
No, that's actually a great point, Kyle, because, I think if you're an entrepreneur and you've got a business, most people are going to have someone doing their taxes, right? And so, but still, it's good to have, even though you don't have to understand all the details yourself, to know that it's out there so that you can ask and make sure that they're following up on it. And again, like you said, that point of discussion, does it make sense for you or not? So, still good for the entrepreneur to have a base knowledge so that they can ask the right questions. Yeah, no, that's good.
Yeah. So ask about PTET. The second thing I would encourage entrepreneurs to take a look at with their tax pro is the qualified business income deduction, or QBI. This is a deduction that allows up to a 20% deduction for those who own a pass-through entity business. Pass-through entity would be a partnership, an S corporation, or a sole proprietorship, which is what most of the businesses in America are taxed as, or many of them, I should say. And so I stress that the deduction is up to 20%, because every now and then I'm looking at a brand new return and I'll see that, ooh, we're not quite getting all 20% of that deduction. Why is that? What can we tweak within the business in order to get the full 20%? Because it is a free deduction. It is open to most taxpayers. It is very low hanging fruit. Just this morning, I was meeting with someone. Very first time we are working together. I was looking at last year's return. In last year, the spouse had started up their own sole proprietorship, and the tax preparer completely forgot to take QBI on that new business. This person had two businesses and they took QBI on the primary business, but not the new secondary business. It was a $2,900 deduction. that they was just missed out on. So again, it's just a great point of discussion with your tax preparer. Hey, did I take that? Can you show it to me on my return? Awesome.
Yeah.
And
Okay.
that's a great way to get a low hanging 20% deduction.
Yeah. Sure. That's great. Okay.
Yeah. Yeah. So those are two strategies for entrepreneurs to be taking advantage of. If you are a W 2 earner and specifically a high W 2 earner, you've got more than $250,000 of income. There's a couple of strategies that I always recommend. The first one would be, are you taking full advantage of the retirement accounts that your work offers? We're all familiar with maxing out our retirement accounts, but are we taking full advantage? And here's a great example of that. 401k plans. Employees are able to put in 23,500 from their paychecks this year, 2025. And then the employers can put in an additional 46,500 through matching and through what's called profit sharing. And profit sharing is incredibly powerful to me. If you are either a business owner or you're on the senior leadership team with your company, make sure your company is looking at profit sharing, because what it allows a business to do is put money directly into your 401k, into employees' 401ks, and increase your net worth while at the same time getting a direct business deduction.
Interesting.
Yeah, a lot of businesses are not aware of that. They're not, tapping into that, even if they do have a 401k. Or sometimes people will say, "Well, I have a retirement plan. I have access to a simple." Well, that's a great start. That's a great start because a simple allows you to put away 16,000. But again, that 401k at a minimum, that's giving you another 23,000, if not adding on the profit sharing. So take time to look at your benefits, make sure you fully understand them, and in that you're taking full advantage of those retirement benefits.
So
Another-
Kyle, I just want to circle back around to something. So just back to this idea of knowing where you're spending your money and accounting for where your dollars are going, because even there are a lot of high earning people who aren't paying close attention to what their money's doing, and they're spending money on all kinds of things, and they're missing out on potentially directing more of that into these investment accounts and
Mhm.
taking the most of that. And it's not that if they're spending money on things that really matter to them, that's one thing. But a lot of times that money is just they don't even know where it's going. And if they were paying more attention, back to where we were talking before, they could be like, oh, their quality of life wouldn't suffer at all. And in fact, they would be sort of building wealth for the future more rapidly. So I just wanted to tie those two things together because, right, we were talking of it in the context of kids, but it's also important for adults and even high earning adults. Like it's just important for
Yeah.
all of us, I think. So anyway, sorry, go ahead.
Yeah. No, I completely agree with you there. It's so easy when you kind of hit those prime earning years, you have that breathing room in your budget to just pay a little less attention to your savings and to your spending. And then you take a look at your credit card bill one day, you take a look at your bank statement one day, and you're like, how in the world did we spend that much? Does that really line up with our goals and what we're trying to accomplish?
Right.
Always keep
Right.
an eye on it. So, the last thing that I would recommend for W 2 high earning individuals to take a look at, get with your tax professional and get with your investment advisor and explore whether or not alternative investments could be useful for you from a tax standpoint. Now, what do I mean by alternative investments? Well, typically, when we hear the word investment, we're thinking about I'm spending money today in the hopes that that asset will grow tomorrow and I'll be able to sell it at a gain. However, there are some investments in the tax world where we're not necessarily looking for that asset to grow. We're looking for the deductions, for the credits it will give us that is going to give us more cash flow today to do maybe some traditional investing or Maybe it's as simple as taking our family on that vacation we've been wanting to do. So the first one you may want to take a look at are solar tax credits. This is investing in large scale solar projects. And the reason that these are very popular is that typically for every dollar that a person invests, they're getting between $1.15 to $1.35 in benefit back through
Wow.
deductions, through credits there. And so it can really help you lower your tax bill. The second one is oil and gas rights, where you are investing in oil drilling. And this is one of the most unique tax advantage investments that is out there, because when you invest in an oil rig, you are given what's called depletion, which is what we call depreciation of a natural resource. You get these depletion write-offs that typically it's 80 to 85 cents on the dollar. So and you get those in year one of your investment. So someone who invests $100,000 in an oil rig is very likely going to have $85,000 in deductions that they'll be instantly able to apply to that first year's return. And you think about someone who's in the 37% tax bracket, that's $31,000 right there that we've just chopped off their tax bill.
Wow.
Not to mention,
So, and not to, sorry, go ahead.
I was going to say, not to mention that with the oil and gas, it's very speculative, but there are times when it truly does pay off like a traditional investment would, where you get these royalty payouts over the next couple of years from the proceeds of that drilling. So there's a lot of potential for upside with.
Yeah. So, I mean, sorry. So if I'm understanding you right on if that investment is successful, you're earning a return on that investment like you would with any investment, right? That works out. But
Correct.
regardless, you're getting these, what were they, depletion credits or
Yeah,
depletion?
depletion. It would be the same thing as people who invest in real estate getting massive depreciation write-offs.
Yeah. Wow.
Yeah,
Wow. I mean, because
yeah.
that's a lot.
It's
Yeah.
a lot,
I
and
never knew anything about that.
as those who invest in real estate know, the government has a special name for real estate income. They call it passive income. And if you have a passive loss, you can only offset against the passive income, blah, blah, blah. With oil and gas, that's not the case. You can use those write-offs against any type of income. So a W-2, a K-1, it helps bring those incomes down. Yeah, yeah,
Interesting.
very
Huh.
cool.
Okay.
Very cool. So there's a lot of great opportunities out there, Dominic, and really encourage people. Make sure you're getting with your tax pro ahead of your tax deadline, to just talk with them and just see, hey, what's changed with the tax law this year? Let me give you an update on my family, on my business. What can we be doing? What set credits can we take advantage of? What deductions can we take advantage of? Because there's a lot of great things out there.
Yeah, yeah. Well, and even if it's not a ton of money and it's only a few $1,000s, right? I mean, again, you can either reinvest that or use that to fund some sort of a trip, or I mean, there are lots of
Yeah,
things you can do with that money. And sometimes, right, like you've given some examples where it's pretty substantial, like it's tens of thousands of dollars. So
yeah.
that's yeah, definitely worth learning a little bit about and then talking to your tax professional. So before we wrap up, I want to, because I mentioned this early on, but because this was not something that I really sort of knew about before. Tell us for a minute about the difference between, um, a CPA, right, which most people are familiar with, and a tax coach. What's the difference there?
Absolutely, absolutely. So I would say that historically, the CPA profession has been a profession that operates in the past. We're taking last month's numbers and creating a financial statement. We're taking last year's income and we're preparing a tax return. And the goal of CPAs, historically at least, has been, we need to keep our clients out of jail. So let's file the tax return, check the box, get it done. The 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 vantage point is rear window facing. What I loved about the tax coach designation that I got, it's through the American Institute of Certified tax planners. And what I love about that organization is that it's forward-looking. It's all about looking to the future, to plan, to be proactive. And to use a sports analogy, I don't want to just help my clients report the score of the game. I want to help them influence the score of the game so that when we get to April 15th, they don't have their fingers crossed and in a cold sweat wondering how much the number's going to be. They already know what the number's going to be because we already talked about it. We did projections. We've talked about the credits that they can utilize and the strategies they can use. And so they have a lot more peace of mind.
Yeah, no, that's cool. That's really good to know. And I really like that. And certainly, right, it fits with the emphasis of this show, right, which is, forward looking. And it's not so much about, that's not so relevant for kids, but it's relevant for parents as they're just trying to sort of understand and make the most of all this stuff. So no, I really like that. That's great, Kyle.
Yeah.
So if people wanted to reach out to you in some way, where can they find you?
Best way to get a hold of me would be through my website, proactivecpa.co. That's proactivecpa.co. If you are on LinkedIn, I would love to connect with you. I have all of my social handles on my website. And then if you have any questions about what we talked about today, you can shoot me a message through the website there, and happy to answer any and all questions that people have.
Great.
As we've talked about, my wheelhouse is tax. So if you're looking for tax tips, that is what I tend to post online.
Okay, great. And I will put links for that stuff in the show notes. So any last words of advice before we wrap up?
I would just, two things that I would ask of your listeners. The first, I've already made a plea for. If you haven't done so in a while, sit down with your accountant, your CPA, and let's get a plan together for this year, for next year, of how you're going to save on taxes. And then for those of you who are entrepreneurs, I would say if you take anything away from this, do everything that you can to get your kids on payroll and get them contributing to their Roth IRA.
Kyle, thank you so much for all the great advice. And thanks a lot for the conversation. It's
been
a lot of
fantastic,
fun.
Dominic. I've really enjoyed this, and thank you so much for having me.
Thank you for listening to this episode of the FI for Kids podcast. Our intro music is courtesy of Douglas Cameron, and our exit music is provided by the Zoo Human Project, including our holiday theme tunes for the next few weeks. Please check out the musical friends of the pod at Spotify. Thanks again, and we'll talk next week.
The weather outside is frightful, but the fire is so delightful. And since we've no place to go, let it snow, let it snow, let it snow. Ooh, it doesn't show signs of stopping. And I brought some corn for popping. Lights are turned away down low. Let it snow, let it snow, let it snow. When we finally kiss goodnight, how I'll hate going out in the storm. Can't stand it, can't stand it. But if you really hold me tight, all the way home I'll be warm. The fire is slowly dying, and my dear, we're still goodbying. But as long as you love me so, let it snow, let it snow, let it snow. Let it snow, let it snow, let it snow.